So if you're looking to buy a home, you probably have read a lot of stuff online, articles, blogs, friends, families. You're getting this, that, and the other, all coming at you from every different direction. And you're like, well, this isn't true, and this isn't true, and this is true, and false, and that, and what? We're gonna cover some of those mortgage myths right after this. If this is your first time to the Living in New Jersey channel, please feel free to click on the subscribe button, tap the bell for notifications so you can be one of the first people to be alerted to awesome videos like this. My name is Matthew Williamson. I'm a realtor here in New Jersey, and the team and I on the daily. We get emails, we get calls, we get texts, we get smoke signals, we get carrier pigeons. We get it all. We don't get faxes. We're not
doesn't like faxes.
I don't. I'm not a fan of those. Come on, folks. It's the 21st century. It's the 21st century, right? You know, whatever with the time, but we're a highly advanced society. Get off the fax machines. So either way, we get communication from people just like you looking for a house, because chances are you're swiping left, swiping right, or right and left. You know, you're on that website, that dating site for houses. You know what I'm talking about. And then you text your realtor, I want to buy this house. Oh, it's sold already. So we're going to answer some questions today. We get a lot of questions, as I said, from prospective buyers looking to buy homes. And we're gonna get to the bottom of that. We're gonna cover some of those mortgage myths. But before we get into that, I'm gonna let a very important person. He's very important because he's gonna help you get a loan for a house. I'm gonna have him introduce himself. Go ahead, sir.
Good afternoon, everybody. My name is Brian DeVito. I'm a Senior Vice President of Mortgage Lending with Guaranteed Rate.
Awesome. How long have you been doing it?
Long time. If you've seen the other videos, it's a long, long time.
Really long. He may not look old, folks, but he's like 82. He's up there. You've been doing this for about 50 years, right? You got it in your early 20s. You're in your 80s now. Like, you look great, by the way.
My Social Security. I got my Social Security today.
Cashed it in, did all that. Phenomenal, folks. Phenomenal how long folks can live nowadays. So we are going to get to the bottom of some just randomized questions. Will be randomized to you, not to us. They come from emails and they come from phone calls and texts and things like that. Of mortgage myths. We're gonna bust some of those. We're gonna let you know what's true, what's not, and we're gonna start getting after it right now. So, common question, you get a lot of this from the first-time home buyer, okay? How much down payment am I required? Am I required? Do I have to put down 20%? Is that true?
No. So if you're buying a property and it's going to be your primary residence, you don't need 20% down. If someone's looking to purchase an investment property, then a minimum 20% down payment's required, maybe even more, but primary residence, 20% down payment is not required.
Excellent. You also have people saying, hey, my credit's not that great. I've made some late payments. You know, my credit's beat up a little bit, right? It's beat up a little bit, real talk. I have under a 700 credit score, and I've been told if you don't have a 700 credit score, you can't buy a house. Is that true?
False. So conventional financing, the minimum credit score requirements is 620. Ooh. With FHA and VA at the present time, minimum credit score is a 580.
Really?
Yes.
Excellent. So for all of you folks that you said your credit's banged up a little bit, if it's under 600, if you meet certain qualifications, there's hope.
Yeah, and just speaking upon the credit too, you know, sometimes there's some easy fixes. If somebody, maybe they have a high balance on a credit card, but they have the cash to pay it down, I could potentially get that credit score up in as little as, 3 to 5 business days by doing what's called the rapid rescore, removing medical collections. So if somebody has a lot of recent late payments, yeah, there may not be a way to boost that score quickly, but revolving debt, medical collections, that could be an easy fix.
Wonderful. See, look at that. If your credit is a little beat up, you're not dead in the water. That seems like a very dark, ominous tone, dead in the water. Point is, there is some silver lining there. There is some hope that potentially after talking with Brian, you can kind of peel back the proverbial layers on that onion and find out what you can do. All right, what is another question we get? Oh, here's one. We get this one a lot. I've had a bankruptcy, so I've been told I can't buy a home. I filed bankruptcy. It happens, folks. It's not a crime, okay? It's not a cardinal sin. It happens. I filed bankruptcy, and I have been told because of that, I can never own a home. Is that true?
False. So depending upon the type of loan that somebody's looking to get, the seasoning period or waiting period from the time that the bankruptcy occurred could be 2 years, it could be 4 years, but if you had a BK, you're not dead in the water. You still have options.
Wonderful. And like you said, it just depends on when it was discharged.
Yeah.
And as long
and
as
the type of loan, but
perfect. So between the loan and waiting a little bit of time period, you can have a chance. Excellent. You got a chance. Here's another one. Now, this is kind of a myth. People are like, clickbait. You can't buy a home with no money down. There's no such thing as that. That's a bunch of hogwash and baloney. I don't buy into 0 down to buy a house. Are there loans out there that a buyer could go 0% down payment?
Yes. So if someone's a veteran, and if you're watching this video and you are a veteran, thank you for your service. But as long as you have the income required to support the mortgage, you could potentially finance 100%. And also with the USDA loan, which is for properties in rural areas, they also offer 100% financing. So there are options.
That's wonderful. And to all the buyers out there looking in the rural areas, meh, because that's where all the farmland is with the cows. And that was my cow impression. I hope I did a great job. So that's a couple of questions that we've gotten. Here's one. Now, this one I really, really like. This is one that it comes to mind. I've had a lot of people ask me this. I don't know that if it's maybe a yes or no question, but basically the question is, should I get a pre-approval before I find a house?
1,000%. You shouldn't even start looking at houses until you're pre-approved. I can't tell you how many times they're on Zillow, hate that website, but they have mortgage calculators on there.
We hate Zillow. We're going to get sued. We're getting cease and desist letters.
That's our opinion, but I've had clients that are on Zillow. They're looking at the mortgage calculator and it says, the $500,000 house, it's a $2,500 a month payment. Then they call me up after they see the home and they love it. They want to make the offer. We start going through the numbers and what they thought was a $2,500 a month payment is actually $5,500 a month because they didn't read the fine print that the calculator was taking into account a 25% down payment. Didn't include homeowners insurance. Didn't include property taxes. Didn't include mortgage insurance. So don't look at those calculators. Call a professional like myself. But yes, that should be the first step if you're looking to purchase a home. Get pre-approved, then start looking at houses.
I agree with that 1,000%. And obviously, he's the money guy. He's the finance specialist right here. But the mentality behind that, and once again, I get the text too, hey, we want to look for a home, we saw your video online, or hey, a friend or family referred you. Hi to those friends and families that refer, by the way. We love that. Thank you.
We love referrals.
Love referrals. But people will reach out to us and they'll say, hey, we're looking for a house. And I'll say, great, you got a pre-approval yet? No, we want to wait. My mentality to that is, how do you know how much you can afford? It's kind of like saying, and God forbid I put me in the bucket with car salesmen, because, we're not. But my point is, I'm not going to the Ferrari dealership if I can't afford a Ferrari. I'm going to test drive it. If I like the Ferrari, then I'll find out if I can afford it. What? It's not how it works in real life, folks. It's not how it works in real life. So in relation to get your pre-approval first. Get your pre-approval first. What other questions have come across your plate? Have you thought of any, or have you gotten any that come up a lot beyond what we touched on here?
Yeah, one, sometimes buyers will see something online that if they're buying a home, closing cost is, 2% or 3% of the sales price. That's not true because, in Jersey, there could be, let's say, two $400,000 houses. One, let's say, is in Union County. Let's say the other's in Middlesex County. Let's say both clients are purchasing the home at $400,000. They're putting 5% down, but the property taxes are going to be different on those properties. And when someone's putting down 5%, the taxes have to be included in the mortgage. So part of the closing cost is typically going to be about 5 months worth of taxes. If taxes on property A are $6,000 a year and the taxes on property B are $12,000 a year, if we take 5 months for each of those, you're going to see a big discrepancy. So, there's no mathematical calculation that says closing costs are X percentage of the sales price. That is not true.
That's great. I think you can kind of put that in the myth buster, the myth buster category, because I get that too. I had a conversation the other day where a buyer was like, oh, I was reading online and it says that closing costs are 3 to 5%. It's like, oh, I can do that too. Closing costs are either going to be 1% or 100%. It's a range. It's not at all exact science. So here's one that comes up. Now I tell people this and buyers are like, that's a lie. Those are lies, Matt. They're lies. Are buyers required, depending on the deal, how it's structured, are buyers always required to have to pay the closing cost?
So there's always going to be closing costs with a mortgage. However, if your agent, and Matt's actually very good at this, if your agent can incorporate what's called a seller concession into the offer, that's basically where at closing, I could offer a seller, let's say $410,000 for a property. But let's say that my offer includes a $10,000 seller concession. At closing, the seller is going to give me $10,000, which I would then use towards my closing costs. So I've seen transactions where, we get enough in a seller concession to cover the closing costs. So, the buyer's not paying them, but they really are because it's incorporated into the loan. But, there may be ways where the buyer's not coming out of pocket to pay for them. It's only the down payment.
Excellent. You feel like we've covered a few myth busters here, a few yeses and nos, maybe in betweens, kind of got to the bottom of it?
I do. And then if anything pops up, there could be other things that we're just not, remembering at the moment. But, always feel free to reach out to us.
Absolutely. I'm sure there'll be other volumes of this. Once again, as Brian mentioned, our information will be down below. Feel free to reach out to Brian. Feel free to reach out to me. If you're looking to get pre-approved and get the pre-approval, that link will be down below as well. Once again, thank you for watching this video. Thank you for tuning in. Thank you for taking the time. Take care.
Have a great day.
Bye-bye.